Okie dokie. Now, Bitcoin hit my break even yesterday. So yesterday would be this one, hit break even. Uh, Reason being that looks like there was nothing significant over here. What's significant is up here, and today's tradable bounces from a 4-hour order block here down in 1 hour order block up. So I'm looking for it to at least take out this high. Okay. Now this is again it has something to do with the liquidity thing, right? So how can I put this? We will be speaking about number one, the changes in the state of delivery. It's more of an understanding. Okay, it's more of an understanding. And number two, we will be speaking about uh, shifts in market structure, right? And compare that with breaks in market structure. Again, it's an understanding. Yeah, and then the liquidity thing we'll speak about later, right? So now, when we look at a change in state of delivery, okay, your I'll do it with an example because it's hard to do it just theoretically, and show you some price action as well. You can see, right, at let's say this one over here, okay, here from I think this was day before yesterday. Is it day before yesterday? Yes, it was day before yesterday. So you can see over here, right? Price, of course, it reacted from something. So now, if you look at what it reacted from, is of course a 4-hour fair value gap or something, right? So we have that. Now, yes, it gives you a tradable bounce, but it does not necessarily have to give you boom expansion down. Okay, not necessarily, because you need to have context. Okay, now Bitcoin, of course, there's nothing to the left side, right? I mean the most approximately there's nothing to the left side. It's all the way 1 or 2 months ago. So keeping that in mind, okay, keeping that in mind, when you don't see anything on the 4-hour chart on the left side, you look at the daily. Now, if you look at the daily, can you see over here? There's nothing, right? So from 2 days ago, which was this one, two, this candle over here. If you look at where it went to, right here, right? Small redelivered rebalance. It just touched it and then dropped. Now, just because it touched it doesn't mean that it needs to drop all the way down, because this this is considered efficient price action, right? So it's considered efficient price action. Therefore, there's no reason for price to seek sell side liquidity all the way down in discount. So, what is the portion of price action that you can expect price to at least go to here, right? Why? Because this here and this here, if this wick had not wicked into it, this is redelivered rebalance, meaning when price goes back up there, it's considered balanced. Now, what is the other obstacle, right? What's the other obstacle that you have within this particular piece of price action here on the daily chart? You have this here, this here. This small portion here is inefficient price action. Okay, it's inefficient price action. Therefore, it's redelivered rebalance. So if price goes all the way here, you can expect small selling opportunity, like those like the intraday ones that have been happening all these days. Okay, and then once it goes to the highest, we can expect price to at least drop all the way down here. Why? Because you have equal lows, you have low resistance liquidity, and you have a strong low here, right? So it could drop all the way down, because this here, sorry, this over here, this low and this low forming trend line liquidity, it could fall all the way down. And I would say that yes, it would fall all the way down. But if you want to, take a sell, get out of it, take a buy, get out of it, get a sell, and then ride that sell all the way down, then that's a possibility. That is a possibility. Okay. Now moving on to what's important for this session. I believe I was on this time frame. Yes, over here, right? When you see a reaction from a PDRA, right? That is a change in the state of delivery. This down move here, it's a change in the state of delivery, and it's confirmed from here. Okay, the change in the state of delivery is confirmed at this point. My bad, at this point, right here at the body of the bullish candle, the bullish run. Okay, at this point you have a change in the state of delivery from bullish to bearish. Okay, from bullish to bearish, and you want to then look at, what are my targets for this bearish run. You have equal lows here, relative equal lows rather, over here. There you have
it's 9 o'clock.
Okay, you have relative equal lows, and then you have relative equal lows here as well. Now if you are looking at this from a pure from a inducement standpoint, right? If you're looking at it from an inducement standpoint, you have stop hunt, higher, price breaks market structure, creating liquidity, breaks market structure, goes into a PD array, creating liquidity. So then you have this, right? So if you look at your inducement templates, it's basically that. So trend line, liquidity, and price goes higher. Okay, now I'm going to come back to the same example for the last thing that we're going to speak about, but for now just bear with me on the change in state of delivery. Okay, now this is the part in which there was a change in state of delivery. Now what you have to understand is, it's more of a understanding that, okay, I know that buy side delivery has ended for the time being, right? Buy side delivery has ended for the time being, and price is going to seek sell side inside of this bearish order flow. Okay, price is going to seek sell side inside of this bearish order flow, right? So how will price attempt to do that, to attack liquidity inside of this change in delivery? We understand that if price does this, right, and this portion here goes to a PD array, right, PD array, then this breaker is a high probable scenario. Here is a highly probable scenario, right? It fits the context, it fits inside of the context, right? So you want to be selling that. Now how could you have done it? So you can see that you have the breaker over here, right? And let me highlight it. I think highlighting will be better. So you have the breaker here, price goes, does it multiple times, and then drops. Now this is a 15-minute chart, right? So we are interested in intraday price action. So you can use the same breaker and can set it off until this low. So you have, okay, I have no clue how to read Bitcoin's price. So you have thousand something. So I guess it's 100 pips maybe in terms of Bitcoin, 100 pips. So you have 100 pips, just that. Okay. Now the question is, if you know that there is a change in the state of delivery, how are you going to approach it? For instance, okay, I see that there is a change in the state of delivery. Okay, that's fine. Now how did that change in the state of delivery occur? Will it just occur from anywhere and everywhere? No, you want to see change in the state of delivery occur at a PD array. It can be 1 hour, 4 hour, daily, 15-minute, anything, right? But you have to understand that obviously different time frames have different magnitudes of reactions. So if you know when there will be a change in the state of delivery, judging by how price is reacting, then that is how you can capture moves up, down, up, down. Okay, now, but you have to think of it like this. Yes, you can capture, let's call it intraday mastery, right? So I'll call it IM, no, INM, right? So INM, and you have context. Now yes, you can capture trades left and right, up and down profitably, but you have to do it within this. Now the context for Bitcoin is there is nothing to the left hand side, therefore its movement is inside to go inside of deeper premium, right? Its movement is just to go inside of deeper premium. Therefore, any selling that we do, right? Any selling that we do, now this is something for the notes. Any selling that we do stays inside of the current dealing range. Okay, any selling that we do occurs inside of the current dealing range, and price tends to not go outside of the dealing range until it has met its draw on liquidity. Okay, until it has met its draw on liquidity. So we know the draw on liquidity on Bitcoin is up. Um, okay, so this is possible only if you know this. Then let's move to the 5 minute. Now look at this. Now let's assume that we did this in the Q zone timing. So okay, so Q zone timing was here. Then we want to see the breaker form. Okay, breaker has formed as you saw price go down, and here. Now you see uh, the 15-minute chart showed the change in state of delivery to be over here, right? Here, this one over here. Then on the 5 minute chart, you can clearly see that the change in the state of delivery actually occurred over here. This bullish candle here. This is where the change in the state of delivery has occurred on the 5 minute chart. So this is how you can refine it. Yes, on the 15-minute chart, it was this portion here. But if you want to refine it, it's this portion. Because why? Because you have sell side delivery here. Then you had a big bulk of buy side delivery, right? So this here, right? Over here is your state of delivery. Now, don't get me wrong. This is not your change in the state of delivery. Price piercing this and going lower makes this portion here a change in the state of delivery, right? We are thinking of it from a theoretical standpoint as to what's exactly happening. We are shifting from buy side delivery to sell side delivery. So when we understand that we are shifting the type of delivery, right, then we can take part inside of we can take part in market moves inside of that particular state of delivery, right? So if the state of delivery went from bullish to bearish, then we want to be bearish. If it then goes from bearish to bullish, then we want to be bullish. So when the state switches like that, you want to be trading with that state of delivery. All right. So when you saw this, and when you understand that the context remains that yes, price is predetermined to go higher, but at this moment of time, we just want to attack liquidity. 50 bucks. No. It's not. It's not the same. How do you know where it starts? There are some down candles in the initial upside swing. You mean here? Here, you mean this part here? Where my mouse is? Where I said it started. You mean here? Ah. No. No. You're getting it wrong. Okay, you're getting it wrong. No, listen. This correct on the 15-minute chart. This is buy side. Yes, you can keep it here. Yes, you have this break over here to give you a range in which you can look for price reactions, right? Then you go to 5 minute. Now the 5 minute you can refine it, because on the 15 minute, although you saw it was bullish, making this the if price comes down, this is the point in which there was a change, right? On the 5 minute chart, it's more clear. On the 5 minute chart, you want to look at the bigger bodies, right? Because this over here doesn't give you much information, right? So the change in the state of delivery on the 5 minute chart is here, meaning when price crosses this point, this is where there was a change in the state of delivery from buy side to sell side, right? The change price reacts from a point of old order flow. So order flow here is what? Bullish. So if price has exceeded that point in which there was bullish order flow, then what does that mean? That means that for this particular portion of time, there was zero offers over here. No one was willing to buy or sell above this price, right? There no one was willing to buy or sell above this price. They wanted to sell, or the algorithm wanted to reprice lower from here, from a point of old order flow. Okay, So this is called a change in state of delivery. Don't think of it like, don't think that it's going to affect your trading in any ways. Just an understanding. Because when you understand it, then you know when exactly market is bullish, market is bearish, right? So this is something that will naturally come to you with practice. Okay, so, and don't worry, I'm going to go through more examples. So we have this here as your change in the state of delivery. Yeah, correct. Right, this here is your anchor point to check whether, when price goes down, that will be your last point of buy side delivery on the 5-minute chart. And so if price does not respect the 15-minute one, then what can you expect? Obviously you're going to expect something to happen from the lower time frame, right? So this is the one. Okay, this is the one. Now look here, price goes down. Okay, and then what happens? It stops at the point in which there was last buy side delivery here. And also it stops at where? It stops at the discount. It stops at the redelivered rebalance low here. Sorry if it's not straight. So, and we have this here. So this is fine. And then it reacts and goes lower. Right? Although it took some time, it goes lower. Now, if you then look at this now over here, price has done its job. See this? Now we have equal highs, obviously. Price goes. Now, did it take it out? Yes, it did. Now, over here, you want to see. Now, see, majority of the sell side delivery happened somewhere here, right? Over here. Okay, now I'm letting it play for you to figure it out. Now, see. Wait for price to break this high. Okay, broke. Like I said before I played it, majority of the sell side delivery happened over here, not these small ones. This one. This is what showed that okay, order flow is bearish, right? Order flow is bearish. Here, this one here. This was your what? Your last sell side delivery. That was a change in the state of delivery. This big candle over here, change in the state of delivery from what? From bearish to bullish. This shows you that. Now there needs to be context as well. Why is it moving up? For you to believe that this is a change in the state of delivery. The question is why, Sean, why is it moving up? Why do you think that it's a change in the state of delivery? That's the question. Because we had that underlying idea that we are operating within a dealing range, price is bullish, and we will work inside of the dealing range and go higher. So what did price do? Takes out liquidity. So after it takes out liquidity, does it have any reason to stay here? No. Therefore, that's number one. If we see price exceeding bearish order flow, then we know that it's a change in the state of delivery. Okay. Then you have this one here. Okay, that's your point in which there's a change in the state of delivery, and that's where you buy, because anything below here, right? Anything below this point is simply not being offered. No one wants to buy, or no one wants to sell. Okay, no one wants to buy, no one wants to sell. So this is a change in the state of delivery. Okay, now let's play some more and see what else is there. Let's go to the Q zone timings. Yeah, so okay, I can see it over here. So 12, 1, 2. Okay, here. Right. Is this today's one? I think it's today's one. Okay. So today's one. Okay. So today's one, I was in a sale today from somewhere here. Okay. Now see. I took the sale somewhere. Can't remember. Damn it. That was a breaker scenario somewhere here. Okay, I took it over here. Okay. Now, and it was a pretty short one up until somewhere here, like a 1 hour trade. Okay. So over here now, yes, we came to 4 hour order block, consequent encroachment, all of that, but this is not something that is a valid PD array on the daily chart. Okay. And on the 4 hour chart, this order block, if you want, I can show you. This order block comes from a piece of price action where there is a low resistance signature. Here you go. Low resistance signature. Right? So basically relative equal highs. You know that we don't sell there, right? And we don't expect large moves from that point. So it's a temporary move. Okay, it's a temporary sell-off. Now, keeping that in mind, what I thought was, okay, I'm looking for the change in the state of delivery. That's what I'm looking for. Here. So essentially this was the one over here. And where is your change in state delivery? Here. Okay, here. Or you can say here, because this does not have much of a body, here. Okay, buy side delivery, price sells off. Now what's the context? Context is PD array, and if price shows us something, that means it's a change in the state of delivery. So it shows us that the whole order flow from here, right, is being overtaken by sell side delivery or bearish order flow, making this your last point of buy side delivery. Now I'm not taking this one because this is a has a big wick, right? So we'll take this one, the one that has some body here. Okay, this is your change in the state of delivery, right? So change in the state of delivery, right? So yeah, that, and price goes down, goes immediately in there, and then just drops off. Now my sell, of course, was somewhere here, inside here. Okay, yeah. So here you go. My take profit. If I said it was over here, then it must have been somewhere here. So it was somewhere over here, and then price came down, goes up. Just that. Now I sold somewhere here, took profit somewhere here. I sold again over here, took profit over here. Okay, took profit over here. Then I was now see I was expecting price to at least take out the equal lows over here, right? Then, or I sorry, I did take it out. Did he take it out? Yeah, I did take it out. So I took it out, and then I realized, why is it, why is it spiking up and spiking down like this? Because there should be a reason as to why it's spiking, right? So then let's play it a bit more. Okay, then I saw the 1 hour order block. So what does that mean? This means that it is engineering liquidity. Okay, it is engineering, and then it takes out the low resistance liquidity as well. Now, is it working inside of a dealing range? Yes. Stop hunt, up, dealing range high, dealing range low. Are we in discount? Yes. Discount pricing as well. 1 hour order block. Now, you see, why is it respecting the 1 hour order block? Because the narrative is what? Bullish daily. Bullish daily. Daily hasn't reached any particular point of interest in which, it wants to look for sell side delivery, that extended sell side delivery, right? So we have that. Now, now the buy that I'm in right now, I don't know why it's not showing over here, but okay. Probably when I press the export direction. So uh, stop hunt down. Do we have a change in the state? No, we want to see the sell side. We want to see sell side being overtaken by buy side. That's when we know that okay. So this order block has actually caused a change in order flow from bearish order flow to bullish. So let's see. Okay, okay, okay. Yeah, this. Now guys, here. Now what's this portion here? Redeliver, rebalance. Redeliver, rebalance. So this is the point of old order flow, and this is redeliver, rebalance, right? Point of old order flow, redeliver, rebalance, gets balanced, and with Bitcoin, it's never too accurate. There's some whipsaw action over here, and then finally it goes higher. Finally it goes higher. So if you then see, that's where it is right now. Over here, right over here, can we trust? Could we trust this to hold? It's unlikely, right? It's unlikely. But if it does, it will just come down
Hey, Sean.
Yeah.
Yeah, you see how you said that this portion right here, it is it that the fact that this don't have any PD array for one of the main reasons why this actually rebalanced up here and took up because it's no reason to mitigate anything in this area, or is it another reasoning behind the rebalance that you
This
know
this rebalance over here.
I got you. So basically like we are in basically saying like there's no reason for price to mitigate out of this area.
Uh-huh. Yeah, yeah.
So so it just rebalanced up here.
Yep. So it rebalanced up over there, and then you see it goes up, right? Now see, where does it go up to? It goes up to another point of clean price action, right? So which is expected. So when we see a reaction from here, was it over there? Yeah, over here, right? You see where the reaction happened. If I draw a line for you, over here, where the reaction happened. It happened here on this candle, right? So now when it takes this order block and while having relative equal highs over here, then it will try to take out sell side liquidity, right? So
Yes.
when we look at the sell side liquidity that's existing over here, right here, you can see it tried to come here. Let's see if it took it out first. This was low 44391.28. 44392.04. So no, it's relatively equal, right? It's relatively equal, meaning that if price goes no sorry if price is going to come down from here, it will definitely come down here and then go higher. Yeah. So it's like game line. So this portion I'll explain this portion to you guys after we speak about shift in market structure, because then it will all tie in. Yeah.
Okay.
Okay. Right. So that's that. Let's take this out. So that's the buy. So that's my buy. So I bought when price went up, it came down. And when it went up like this with this big wick, I did not wait for the close. That was my bad, but I still got a okay entry point. So I bought over here at this fair value gap scenario. Okay. Uh, let's go to the 1 minute. 1 minute. 1 minute. 1 minute. Okay. High, high. You have the low, right? You have the low right over here, one that we just spoke about, meaning that we have engineered liquidity, right? Engineered liquidity that could be taken out by this move that's coming down. Okay, by this move that is coming down. So that's something that we can't stop. So what we'll do is we'll move the stop here. Okay. So now here and also over here, you can see that there was a volume imbalance, right? Volume imbalance here, and there's a volume imbalance here. Now, that could be a reason, if price decides to come down, that could be a reason for price to come down, take out liquidity over here and react from the volume imbalance. Okay, that's something that could be used to go higher. But I digress. So, looking at the 5 minute again, if you look at, okay, we just spoke of this. If you look at another example of a change in state of delivery on, for example, this portion here, it's universal, right? If you look at it anywhere on the chart, right, it's better if it's at the correct time of day. But even if it's outside of the correct time of day, you can just observe and see whether what you're thinking is right or wrong, right? So look at this spot here, right here. See price stop hunts down, up. Now this here was the last point of what, bearish order flow for this region, right? But for this entire portion, because you can see the swing high here, right? The swing high here. But for this entire portion here, from which price broke market structure, this was your last sell side delivery. It had large body, and then these don't matter because it's all wiki, it's all wiki, right? So there's more sell side delivery that's happening over here. So this here is your last sell side delivery, and you draw that out here. Now the next part is context. Do we have the proper context? So let's see if we have the context. So go 15-minute chart. yeah, this one. So what's up? Unmitigated portion of this big order block, which is stuff that we already know, or you can call it this as well, the unmitigated portion of this order block. So where's here? That's your sell. Ha, that's your buy. My bad. That's your buy. Okay, that's your buy. Even though it's not in the correct time of day, you can just observe the buy or put it on demo. This is your buy to go where? To go where? Here. Why? Because this is buy side liquidity, equal highs, relative equal highs actually. Yeah, relative equal highs. Okay, that's the low resistance liquidity run. Okay, that's the low resistance liquidity run. Uh, yeah, so that's pretty much it. From which you can determine when order flow changes and what you can do to catch the move and see price respects this, goes higher. And what's formed over here? We have a swing low forming and then it breaks structure, right? Swing low forming, boom, break structure, making this a strong low, right? Strong low. So when what happens when a strong low is broken? Boom, boom, bada boom, not downside movement, sharp upside movement, like I've told you guys. So sharp upside movement to take out this high. Okay, that's the change in the state of delivery. Okay, this is stuff that I look out for on a daily basis. So here is, if you want more examples, here is a change in the state of delivery. If this order block was not here, then this reaction here would have been a sustained reaction down. Okay, what else? That's pretty much it on this chart over here. That's pretty much it, right? So your changes in the state of delivery in this particular chart, right, or this particular piece of price action is here, 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 right? So all these changes in the state of delivery, right? And you can also say this part over here, but it did not hold because of the 1 hour order block. That is a change. Now we have to bridge the gap between understanding a change in the state of delivery to a shift in market structure, right? So, but that now we have to understand what's the difference between a break and a shift. So let's say you have order flow up, okay? Now order flow up and then you have bullish structure, right? This is a break in market structure. Break meaning it's breaking to go higher. Okay, break meaning it's breaking to go higher. Then what about while having bullish order flow, you take part in sells like this? These are shifts in market structure. It's shifting. It's shifting to meet temporary targets. Okay, it's shifting to meet temporary targets, or market structure is shifting to meet temporary targets, creating what? Creating liquidity along the way, right? Creating liquidity along the way. It's shifting market structure in order to create liquidity, as you can see here. See over here, breaks, liquidity created, breaks. My bad, shifts, liquidity created, shifts, and then comes to a particular point of interest and break, break, break. And now what's happening? It's potentially shifting. It's shifting structure. Okay, so break in structure. Now this is just theory. You don't need the practical application, but it's simple, right? So for example, this here, this here, this here is a shift, shift in structure. Down we go. So when you need the shift in structure first. You need the shift in structure first before you look for a change in the state of delivery. All right, you need the shift in the structure first before you get the change in the state of delivery. So step one, you need to get your shift in market structure, then you need to get your change in the state of delivery. This is the order. It's not one way or the other. Okay, it's only in one order. Don't try to switch it up. This is your order and stick with it. You get your shift in market structure first, then you get the change in the state of delivery for what? Counter trend moves. Okay, counter trend moves. Then what about pro trend? Meaning when you're trading with the order flow. When you're with the order flow, you want break in market structure first, right? To want to see change in the state of delivery. So This this here is a break in market structure. This here is a point in which there was a change in the state of delivery. Okay. Uh, Here is your. Let's look at a proper example for the other one. So here. Okay. Here is your shift in market structure. Shift in market structure. Here is your change in the state of delivery. This one. Change in the state of delivery. Here is your shift in market structure. Here is your change in the state of delivery. Okay. Then here is your break in market structure. Right on the 5-minute chart, here is your change in the state of delivery. Now it went down because it needs to generate some liquidity. Okay, so those are like variant scenarios, right? Here is your break in market structure. Oops, your break in market structure. Now where is your shift? Not shift. Where is your change in the state of delivery? That's the thing. Where is your change in the state of delivery in this case? Right? In this case, where is your change in the state of delivery? Ideally, it would be this one, right? So let me just take this out. Ideally, it should be this one, right here. Right now, the reason why sometimes it may not hold, okay, is due to the fact that it needs to what? Take out engineered liquidity. Okay, only if it does not hold. If you see that it does not hold, then that means it's looking for engineered liquidity. Is the BMS towards the STF order? Yes, BMS is towards the HTMS, towards the HTF order flow. SMS shifting market structure is when you're trading against high time frame order flow. That's a shift. When you see the shift, you are confident in taking a sell or a buy. Okay, so that's up to your testing. SMS is countering. Yes, correct. Okay, break is with order flow. SMS is against order flow. All right. Uh, then you can apply this fractally, obviously, from a fractal standpoint. So, yeah, SMS, BMS, and C changes CSD changes state of delivery. Is everyone with me? Everybody? Yes. Yes. All right. What about the rest? Am I recording though? Yeah, I am. Okay. Okay, I am recording. Okay. Right. Let's get to the. No, I had to watch again. Ah, shit. Okay, no. Just tell me what do you not get? What part of it do you not get? Just if you can tell me, so that everyone benefits as well. We replay to a market as it unfolds quick. That'll be hard because then I need to mark all the high time frame stuff. So using what happened today, I can show you because like that, like I say, it's an understanding, right? So with that understanding, you need to have everything already on your chart to do it properly. Okay. Right. Righto. Okay, so can I move to the next part, the liquidity thing? Everyone, do I have permission to move to the liquidity part? Yeah. Okay. Okay. Right. Now here's how it is. And you see, if I zoom out, where's my mouse? Okay. Here. You can see that every time. Remember the study I asked everyone to do. Study the high when price breaks a high, reaction from there, breaks a low, reaction from there, right? You see, now you know that order flow is bullish, right? I'm using this as an example only, but I'm not going to go into detail until we get back into algorithmic stuff. So you understand that order flow is bullish. Okay. Now with this understanding that order flow is bullish, see that sometimes when you see scenarios like let's say for example, damn, it's hard to find examples. You because I saw it today. If I saw it today, then it must be on a lower time frame. We'll go 5 minutes. Okay, here you go. Right. Now you see here, right? Over here and over here. Price follows this. Now here's the algorithm, not algorithm. Here's the algorithmic steps, right? The price needs to make. Now this is not to say that it's part of it is it, this is not to say that it's not part of the algorithm that I gave you guys, right? It is part of it, but then it cannot be explicitly written down. Okay, it's like it needs to click. You do your work on the chart, and when you see a certain thing happen, and when you see a certain thing not happen, it needs to you need to ask yourself, okay, for price to go up, what does it need to do? For price to go down, what does it need to do? I remember I said from once or twice or maybe 3 or 4 times, in order for price to go, from my observations, in order for price to go down, it needs to go up. Okay, so for step 2 to happen, this needs to happen. Okay, then if you want to see price go up, it needs to go down, right? So this is step 2, this is step 1. So what does that mean? That means this here is a bearish scenario, and this here is a bullish scenario. Now this also lends to the anatomy of a swing, or the anatomy of every swing in the market. Now if you understand this, then if you literally go back in time, if you go back in time to today, right, to today, you could have sold here, you could have bought here, you could have sold here, take profits here. You could have this morning, for me it's morning, you could have bought here, roll it up, you could have sold, bought, and you could have done all of that. Okay, you could have done all of that. But did I do it? No, because I need more practice. Okay, so it's a tricky thing. That's why it's a very tricky thing. That's why I told you guys the high frequency trading thing, it relies on this. Not relies. Yeah, the understanding of it relies on this. The only way you can catch up and down moves is by understanding this. Okay, which is why I said I'm not going to talk about it just yet. I need more time to collect more data. Okay. So, like I said, to go down, to go up, right? To go up, we need to go down. So see, right? See, now I remember I just said we until we meet that particular point of interest, price will typically trade within a dealing range, right? So let's just say that this is our dealing range, this low and that high up there. Now, in order to tackle liquidity here, liquidity here, liquidity here, right, which has already been done by the way, apart from this one, price needs to take out what? Sell side liquidity in order to take out buy side liquidity. I'm just going to leave it to you at that, nothing more. Okay, price needs to, let me write it down. Price needs to, in order to get to buy side liquidity, it needs to go from sell side liquidity. Okay, sell side to buy side. Then in order to get to sell side liquidity, what is price going to do? It will take out buy side liquidity first. You see now what I'm getting at? Buy side, buy side, sell side. Okay, so to get to buy side, price takes out sell side. Boom. Okay, to get to sell side, price takes out what? Buy side here. Then here, you see what happened here? What happened to this swing low here? What was created below this point? Sell side. Sell side, right? What was price taken out as it went up? Buy side. Buy side. Price took out buy side and it came for sell side. You see what I'm getting at? Right? Every time liquidity is taken from either side of the market, there is a tradable bounce somewhere. Now, looking at it on the 5 minute chart is useless, but if you look at it on the 15-minute chart, then it's very good because 15-minute chart gives you data on previous days highs and lows. So that will give you your tradable multiple tradable bounces within a day. Not that I'm telling that you should do it, but if you want to practice that, then go ahead. Okay, so that's the simple understanding. So it's you need to blend it in with the algorithm in a way, because the number one thing is, right, the number one thing is, without context nothing works. Nothing works at all. Without context nothing works. I could I've seen on Instagram, uh, from my country. There's this one guy. There's this one guy that started a crypto mentorship or course sort of a thing, right? Course sort of a thing. They have no underlying. How can I put this? And I know because my friend just went to check that out, see whether it's anything comparable to what I do, right? And so what he said was, all they do is use RSI, moving average, blah blah, blah, right? And when did this move start? This move over here, this I believe it's this one. This one. So this here is obviously the start of a bull run, right? Yeah. But we know that there's something bad coming soon, right? So what he told me was, the guy who is teaching them or whatever is basically advising them. Now, number one, that's illegal because he doesn't have a certified financial that certificate to advise, right? And they post screenshots of the members or students or whoever, saying that, thank you for telling me to buy this, for telling me to do this, for telling me to do that. So it's more of an advisory than a course sort of a thing, right? But the point is it's all driven by indicators. It's all driven by indicators. While obviously, no, we know that the oil flow is bullish, but now that's the context and narrative. But once it gets here, okay, once it gets here, and I'm not saying the biggest move will start from here, but it could be a sizable move from here. When it gets here, right, and if they were advised to buy somewhere here, which is obvious, which is an obvious target, and also here as well, by the time price drops, the moving average will still say that it's a buy, right? Moving average will still say it's a buy. Yes, it will bounce off this propulsion block, right? It will bounce off this propulsion block after it goes higher, but what's going to happen next? All gains gone. So my point to the story is, this buy over here at a later point of time, hypothetical scenario obviously, because it could come back now over here. The point is, if it goes up here and there's a significant order flow change, right? What's the context? Bearish. Will this work? Someone tell me. Will this work? While the moving averages and whatnot, RSI, blah blah blah, when all that flash bullish signals, will this particular bullish signal work after coming from up there? Rest? What about the rest? No, right? Won't work. So that is the context. Without context, nothing will work. Right? Without context, nothing will work. Right now, or these past few days, they're all moving average crossovers definitely worked. So what does that mean? That means that they are set up to fail, right? Trendline liquidity. Moving average is a trending thing, right? So trendline liquidity, they buy here, their stops here, buy here, stops here. And in the context that we'll be getting from here or above over there, it's a one-way street down here. Taking all of them out, and then you see those people stop posting reviews. All right, so we have that. What's the blue dots? Blue dots. It's my way of doing a higher time frame PDA, because highlighting a box is like, I don't know, it just felt off to me for some reason, so I just put the lines. Okay, so like I said, buy side to sell side to buy side. That's how you can catch up and down moves. Now, while price is one directional, okay, while price is one directional, expect expect it to trade within dealing ranges. Once dealing ranges are broken, expect maybe one or two more dealing ranges to be broken. So that is something that we'll discuss later on. Once everyone, not only you, me also, once we all progress further with the algorithm. Okay, uh, right. That's pretty much it, guys. So today's session was quite short, but it was to the point. Shift in market structure, change in the state of delivery. If you did not get it, I understand it is hard to get it, because there are confusing factors in between the break in market structure, shift in market structure, right? So go through this video and stop when I say a shift in market structure is a market structural shift against current order flow. A break in market structure is a shift in is a okay, you can say, is a market structural shift to in the direction of current order flow. Okay, then the way that price moves up and down, right, moves pro trend and counter trend, and how you can get in those moves is by knowing where the current drawn liquidity is, what your current interbank dealing range is, because it's going to trade within that. Okay, it's going to trade within the current dealing range, right? And you're going to trade up and down inside of that. Okay.
Sean.
Yeah.
Hi there. Would you, just for the purposes you are recording this, I noticed you said earlier, you said with regards to counter trend, SMS then CSD, but you kind of drew it in the opposite order. Would you be so kind again just to go through those last couple of steps when you're doing counter trend? So you said shift in market structure, then a change in the state of delivery. Would you mind just going through that again, just on the chart, so it's on video, so we can go back over it?
Yeah. Okay. So we, for example, today's one, we have here, we have the shift in the market structure here, right? And this is your change in the state of delivery. So essentially, even though we see this, right, the change in the state of delivery is confirmed by the shift. Okay, the change in the state of delivery here, let me just write it down so everyone can see it later. I'll call it CSD, so change in the state of delivery here, and the SMS, I think I have it template, yeah, and SMS here. So we have a change. Let me type it down as well so everyone can get it. That's my text box. Here you go. Okay. So to confirm, There you go. So another example would be change here, change in state delivery. Sorry, shift in market structure. Sorry, shift in market structure here, and buy side here. So this is your validation of the change in the state of delivery. Okie dokie. So here you go. And yeah, so that's how it works. You confirm your change in the state of delivery, or you validate it by seeing a shift in market structure. And as long as the liquidity points or the liquidity has not been reached, price will tend to go there, because in order to uh, take out buy side liquidity, it needs to take out sell side liquidity. So we know that this sort of a scenario here, over here, this low and this high over here, it's not much of a trend line scenario, right? Yes, it is a trend line scenario which price does take out, but at the same time, we know that it won't just stop there. It will definitely take this out as well, because price will not react at equal lows, relative equal lows. So here, right?
And my last question, if you don't mind,
Yep.
I'm sure about a week ago, give or take, that when you was talking about changes in the state of delivery,
Uh-huh.
on the lower time frame, you were talking about imbalances around these points here.
Oh, yes.
Is that in the scope of what we're talking about now, or is this going more algorithmic?
That would be when we speak about the algorithm.
Right, okay, no problem. Cheers.
No problem. Okay, then
Is it safe to say that every time if we're expecting for price to go bearish,
uh-huh.
every time there's a break of structure to the downside in a retest, that break of structure would be the SMS, which is which is SMS. I forgot what you say. I forgot what the name of it is, but basically a break of structure in
Yeah.
a retest of
Last buy
the
side.
change of delivery.
Yeah.
So like like it'd be like a break of structure and a retest of the change of delivery.
Yes, sir.
And like but the change of delivery will be located usually at the area where you have a up and down candle.
Yeah, correct. And the up move needs to have some body to it, because the body only represents order flow.
Got you. So the up move in a bearish, which we're trying to find a change of delivery in a bearish bias, should have a volume candle.
Exactly. Yeah.
Okay.
That is
I
right.
appreciate that, John.
Yeah. All right. Okay. Hold up. My glasses off. Okay. Which was the
I'm
date?
I'm 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 gonna have to practice that a little more, but I'm kind of getting the gist of it. I appreciate the time and effort you
Oh,
put
I
into
know.
explaining it to us.
No problemo. Okay. Could you show the direction of SMS CSD on the side identified? Right. SMS is down to the downside. So I mean, there's no direction in a way. So I mean, if price is breaking down in bullish order flow, it's an SMS down. Change in the state of delivery is the bullish move here, right? So I'll I'll do something. I will take a screenshot of this. Take out this. Okay. Copy and let's put it here. Okay, so have a look at that, right? And check it out. Okay, because what I can tell you is SMS is against order flow, and change in state of delivery is the last point of old order flow. Okay, which has some nice volume to it, because that is where the actual last the last point of either buy side or sell side repricing has occurred. Because if you look at the change in state of delivery here, right at this point, just above here, over right here, which price pierced, which was an immediate rebalancing. There was nothing else offered above this point. Yes, it can go, by it can spike a pip or two, but above that, there is nothing that's offered at that point of time. At that point in time, until price seeks sell side, finds orders, or the price engine kicks back on over here, and now it's seeking buy side. Okay, and now see over here, there's no complete run up. This will be a break even. Price will most likely come here. Here. Okay, that's the that's the scenario with how you should be doing this. So number one, remember, always context is key. You need to trade within the current context. And I don't believe I showed it to you guys, but let me check if I showed you guys how you should be doing stuff. Let me get my OneNote. Here you go. Oh, sorry, this is my university stuff. Okay, here. Right, so something like this. Okay. So, for example, high time frame perspective, order flow, which is for me 4 hour. I look at the order flow on the 4 hour. I put my reasoning. Okay, put my reasoning for what I'm seeing, and this was Euro USD. So dealing range high, dealing range low, unmitigated order block, blah blah, all of that, right? So I know that the order flow is bearish. Okay, I know that the order flow is bearish. Then HTF perspective, dealing range identification, because we always need to know the dealing range that we are trading within. So we have this dealing range high. This, it was not this one, I just kept here for convenience, but it's this dealing range low. So why is it dealing range high, dealing range low? We have stop hunt, up, and breakdown. So which is a bearish range in nature. Okay. So here's my reasoning. Previous day sell off takes out sell side liquidity here inside of the dealing range, and should therefore trigger a move up for rebalancing purposes. So see, sell side taken. What is it trying to do? It will try to take buy side here. Okay, it will try to take buy side. However, there is an obstacle of a shift in market structure and an imbalance over here, which could lead to a tradable bounce down into more sell side liquidity, because now we have a scenario of relative equal lows, right? Scenario of relative equal lows. So price will go here and try to what? Take the relative equal lows. Or we go to my execution part here. And this was that day, right? That day we took the sell, we took the buy, and took the sell over here after suffering over here, right? So London Open played well into reaching the previous day's order block and fueled in the imbalance, leading to a tradable sell-off, taking out the dealing range low, the one that we were looking for price to take out. Took it out, and then what? It takes out sell side liquidity. Now it needs to take out what? Buy side. So now how is it going to take out buy side? Look up here, here. After that, what will it get into? Unmitigated order block and previous day's high as well. So here you go, unmitigated order block, previous day's high. There was a buy over here. And see, notice I use shift in market structure here because why? Because order flow is bearish, right? Order flow is bearish. This is shifting market structure in bearish order flow. Okay. Unmitigated minus OB, price reacts nicely, and down we go. Okay. Lana took out the dealing range low. Price now see, look at my reasoning, right? It's everything I'm telling you guys. Since London took out the dealing range low, price needs to take out a short-term high in order to continue sell-side delivery. This is done by taking out Tuesday's high and reacting from the unmitigated portion of the H1 order block. Okay, then if you go to the next day, the one that we had fun going up and down, up and down, up and down, that one. I did not manage to put the comments on this here. I had to do it. But if you look at this, we are still in what? Bearish order flow, right? Bearish order flow. Now, H4 shift in market structure indicates that the order flow is still bearish. Now, this here, right? This over here is something that we'll speak of later. If this is something to speak of later, so please do not think of this as anything, right? So forget about that. So we have dealing range high, dealing range low. Here's your what? Change in the state of delivery. Here's your minus OB for the 4 hour. Okay, now I played forward the next day, and here it is. OB tradable bounce down. See what it did? Because sell side, right? Now what it's trying to do? It's trying to take out buy side. Where's the buy side over here? There's no low resistance liquidity just yet, right? So the immediate buy side is here. So it will trade up in and try to fill in the imbalance and drop. Okay. Now what did it do? It took out more sell side, right? Took out more sell side. Now after taking more sell side, okay, after taking more sell side, it needs to take out buy side again because it doesn't have that catalyst, right? This order block here should have provided the catalyst and given you sharp moves down, but it didn't. So you need to think to yourself, okay, now what do? I need to wait for what? The shift. You get the shift, you come to the change in the state of delivery, and it goes higher. And it's also in a breaker. Okay, it's also in the breaker. Then what happens here? Price comes into the change in the state of delivery on the 1 hour and 4 hour. There's a little stop hunt, and this is the sell that we all got in that day. And then of course it went up and then dropped again. So look at this. We took out sell side here, and where was the obvious spot in which buy side was going to get taken? Here, right? Obviously over here. Over here. Now, although this price action is logical in a way, there's not enough volume in terms of manipulative volume to anticipate price action like that, right? So we waited in New York. So New York comes, probably going to New York. Price goes up into change in the state of delivery, and it just drops off. Right? So this here is a break-in market. Sorry, this here is a break-in market structure. Price drops, returning back into the breaker. Okay, returning back into the breaker. That's the cue for you to sell it off. Now notice, if you just look at price here, where my cursor is, right? One would expect price to, okay, it's going to go up, it's going to go up, it's going to go up, it's going to go up. But you see this massive sell-off that they just out of nowhere just dropped. Why? Did it take out any liquidity over here? No. Right? It did not. So it needs to engineer liquidity by doing this. Take this out and then go higher. So now see, takes out sell side, it seeks buy side. That is how price moves. Okay. Then once we dig deep into further algorithmic stuff, I'll show you guys something else. Okay, so for now just focus on what you know. Don't overcomplicate stuff. First, know the models like the back of your hand, and once that happens only we can move on, right? So anyone have any questions? If not, I am done for today's session. So anyone?
Exact engine and dynamics.
Okay, I shall. Oh yeah. Will you send the notes? These notes? No, these are not notes. These are my daily log entry. My daily log entries.
Hey, Sean.
Yeah.
I was doing a little bit of homework that you assigned us and things like that, and I kind of came across a ideology. I don't know whether it makes sense or not, but I'm gonna just throw it at you.
Okay.
Does a mitigation block
Uh-huh.
is somewhat a low resistance liquidity run, just like how you say like the HR, the high resistance liquidity run is a breaker.
Yes.
Is it
Correct.
safe to say that the mitigation block is a uh a LR?
Yes, you're right.
Oh, good. Thank you. I knew I had a moment. Appreciate it.
All right. Okay.
Can you kind of like show if you can, right? I know we're recording, but can you like show that an example of the how that correlates to mitigation block versus using the LRL?
Here, this high, this lower high. So we have mitigation happening right here. When price tackles it, it mitigates. But since order flow has shifted, it trades through it. That's how. So
Mm.
essentially, if it like if this was instead of the 5 minute, this was the 4 hour, then that was definitely a big tradable bounce here.
Gotcha. So basically, like, there's your, so there's your week. That'll be a week high, right?
Yeah.
Okay, then since this would be the mitigated area, the unmitigated area or mitigation block,
Yes, the mitigation.
and like what happens is it'll have a strong low. I mean a strong a strong low in which whenever it takes out this, it runs and collects
The liquidity.
all the liquidity because this is a LR.
Yep. Correct.
Okay, perfect. All right, thank you, Sean. I really appreciate it, man. I really do.
Okay. Then models, are these the induction models? The one I just showed you. No, the one I just showed you is all. It all basically supplements the algorithmic models, right? So that's pretty much it. We will dig deep into the algorithmic stuff, like, and when I say dig deep, I mean no other topics and no combining things together. We'll speak about one aspect at a time. That way it helps everyone to practice. Okay, so that's pretty much it. Does anyone else have any questions? All good. Okie dokie. All right then, can go back to finishing this freaking uh, stuff over here. Okay. All right, guys. I shall see you guys tomorrow. Live market conditions. Okay. I'll send the recording. Let me stop recording first. Okay.